Good day, trader. Stacey Burke from Stacey Burke Trading. Just a short video today on major reversal patterns. So last couple days, the last week, we've had some textbook perfect reversal trades and some trend trades that have just, been right out of the notes. And again, just to clarify, I know some traders are struggling with seeing things in live time. And again, this comes back to what we talked about with building your playbook, knowing exactly what you're looking for. I'm going to just address some simple things. There's some confusion over the 3 levels, 100 pip boxes, really simple. I'm going to just clarify all of that, but I want to just hammer home. Essentially, there's 2 main patterns. Of course, there are other ones. There's the rounding top, the rounding bottom, cup and handle, some other major ones, and we're going to look at those as well. But today I just want to mainly talk about the double top and the head and shoulders, because you will see those quite frequently in some form or variation. It doesn't have to always look exactly like this, but it's also important about recognizing, again, coming back to timings, time of day, and people seem to be struggling with, seeing these in live time and then also getting off of the screen. So they miss the trade and they're still hanging around looking for trades. So again, we're going to talk about some simple ways to identify maybe the best pairs that are setting up. And then also we'll look at gold, as it seems to show recurring setups in every session. So again, timing-wise, Asia 8 to 11 p.m., London 2 to 5 a.m., and the equity hour for London being 3 a.m. New York Eastern Standard Time, and New York 8 to 11 a.m., and the equity markets opening at 9:30 New York Eastern Standard Time. Now, people have asked me, what about London's time change and daylight saving time? Read this right here. That's all I care about. New York Eastern Standard Time. I don't care what time it is, what daylight it is, or anything else. If it's this time in New York, that's when I'm going to work. I keep emphasizing to keep everything as simple as possible. Now, people emailing me, asking me about Elliott Wave. They're asking me about all kinds of stuff. I literally have levels on my charts, and the timing and the high and the low, and I'm looking for these patterns. I'm looking for reversals. I'm looking for, markets if they're just in a trading range, and whether or not they are set up properly for a decent trade. Even in a trading range, there can be a 25 pip scalp. We'll look at an example on the US Swiss. Or I'm looking for a trend trade, a momentum trade, which typically can happen often in the U.S. session, because we've had Asia trade, we've had London trade, we've established a high and a low. We may find a compressive momentum trend trade coming out of that rectangular geometry if it's set up appropriately. But today, again, looking at double tops, head and shoulders, reversals for long trades and for shorts. I said yesterday they're 100 pip boxes. Now people are saying to me, where are you getting these 100 pip box levels from? How do you draw them? It's the price. Double zeros. So if you're not sure what the increments are, well, it's major round numbers. We can bring that up. Take a look. If you have sweet spots, there's my settings, 100 and 250. But it's the price. That's all that it is. And I talked about level 1, level 2, level 3, level 4. I didn't say they were 50 pip boxes. These are 25 pip boxes. If I'm looking to sell, there are 2 scenarios. I want to sell out of level 3, okay? Now, this is just the simplest way to understand that. I want to sell out of the top. I want to sell high if I'm selling. Or I want to buy low if I'm buying, down at the bottom of the box. Now, in this particular case, the market has broken down below 50% and pulled back and given us a triple top into the 50% level. Breakout, pullback, continuation. You will see that scenario. I talked about the quarter level outside of the 00 box being an area for a possible failure, for a false break and reversal. But it all depends on what time it gets there, how it gets there, how it behaves when it gets there, and if it's in the middle of a move, that could be a breakout. That doesn't mean that you short it or you go long at the next level down. What that means, and this is a perfect example, the market has traded through there. We're already in a short trade. You don't just go long because it's below the 00s. This market is now down in the lower box. It's traded up into the upper quarter level. We may see something come off the previous day's low. So the previous day's high low always take precedent over everything else. Now, I talked about the euro yesterday. I'm just going to review that. We had on Friday, we had Friday's low projected across, and I said that the market potentially had the possibility of revisiting Friday's low. Now, this setup is something you will see over and over again. This is Friday, Monday, the pink lines are separator, where a market will pump up into the close and roll over and retest that high and low. So understand that when this happens and you're missing the trade, that's because you're not actually looking for this. You're looking for something else. You should be looking for this. Now, if we come back and look at our double top, double bottom, triple top, triple bottom possibilities, well, if the market's making peak formations, then I'm looking for a triple top of some sort. The high isn't locked in at this stage from the rollover, but we may already have a high in place, peak formations above 50 from the night before in the U.S. session. So this is the sort of scenario. I'm drawing a line across and then watching the market puts in peak formations. It doesn't roll over or give us a trade setup in Asia. People might have been shorting this, but it's if you're in this and you're shorting this and it's not going anywhere, well, you may want to cut the trade after 4 hours. These trades, as I've said, should move. They should move quickly. So again, we get three pushes to the high. We have a triple top. The market consolidates, and again, I'm going to just give you some tips. When you see volume collecting in the middle of a box and there's a space underneath of these lows, that's easy low-hanging fruit for a market to trade back down through. That's the sort of stuff you want to start to visualize. We zoom in on this. So we have triple top in Asia. The market puts in collection of volume and consolidation before going vertical. When you see something go vertical, think pump and dump right away. Pump and dump. Now, because this market had already put in a triple top, this was shortable right off the bat, right off the beginning of the session. They'd already put in the peak formation, and we had a high locked in from the previous night. Our minimum target is going to be the previous day's low, the low of the day and Friday's low. Now, this obviously pulled back and rolled over and gave a second entry. So I've talked about that. You can wait. You can wait. These are all just rectangular consolidations. The market continued to trade lower. Again, there's our pin. People are going long on this pin, and there's a nice pump and dump for the continuation towards the end of the 12 candle window. These are the sort of scenarios you're going to see over and over again. So again, just looking at the numbers, this market traded off of 50. That's the major 50% level if we scrunch this box up. Now, yesterday on the euro-yen, I talked about the yen crosses. We had a triple top on Friday. And again, I'll just put the separator in there. We had a triple top on Friday. What that means is that we possibly may be locking in 50, the 50 level. They've been up to the third level to 75. And lock that in. 50 then may be a peak formation, locking in the high of that. We have a new month, first day, second day, and I can see without even looking on the 15-minute chart, we had an M formation, a double top. Now, obviously, on a shorter time frame, traders were able to finesse a better entry, but still, even with this pin hammer on the right shoulder of the double top, traders were able to get in at 50. There was 50 pips minimum. It continued for further. It's still following down now. But again, there was an easy 25 to 50 pips on the follow through. The peak formation's already locked in. The market tried to get up into that third level and failed, came back and retested the high and rolled over. Okay, so if traders don't like using the 1 minute, that's entirely your choice. You can trade on whatever time frame you want. But again, even on the shorter time frame, the pump and dump scenario is there. The market was sellable up high on shorter time frames. If traders waited, they were still able to short this anywhere after it locked in the high. The high was already locked in. They retested it. We had our double top in place. Today's a perfect example of a second day trade. It fell through into the next double zero box and traded up to 75, the third level. So again, if I mark off my quarter level, you don't even need to have these sweet spots. You can just mark off the numbers yourself. It's obviously great to have the visual. But again, we see a 1 push, 2 push, 3 push pump and dump triple top for a short trade. So for the gentleman who didn't seem to think you can trade in 1 hour per session or per day, I think you need to go back and do some homework, because there are plenty of 25 to 50 pip trades at the open of these 12 candle windows. And I want to point out that even on the Swiss franc, which traded in a 25 pip box yesterday, that there were still opportunities to either go long or short and gain on a 1 minute chart. Some traders may not be comfortable using that time frame, and that's completely entirely your choice. Whatever works for you, it doesn't matter. The time frame is irrelevant if the pattern is there. I'm only demonstrating this because I don't want to be at the screen for very long, and my goal is to have my trades done and dusted in an hour, and typically around that equity market timing, as we see even in London. So we had a low put in place. We have our W double bottom in Asia. Traders may have taken this. The market rolls over in the gap and comes back down and gives a version of a triple bottom of reverse head and shoulders. We could call this the left shoulder, the head, and the right shoulder for a long trade. And on that right shoulder, you'll notice there are 3 pushes. This is after London has opened. So London's come back down for a second touch. We've had a break in structure, and then 3 pushes into that right shoulder for a continuation back up to the quarter level. But what I wanted to point out, which was the optimal trade, was the triple top just prior to the US session window. So we have a high. The market then proceeds to trade through that with 1 push, 2 pushes, 3 pushes, breaks down back inside, retests that left shoulder, engulfment inside bar for a break in structure and a vertical move back down. Now I'm only demonstrating this to show that even in a 25 pip box on a pair that has had a very narrow range day, that there are still really great textbook 25 pip setups. Again, the pump and dump started at the end of the 12 candle London window. They've brought it up into the quarter level, into the previous day's high. They've engulfed the high, pulled it back, and that's failed follow through. We have a break in structure. And again, I would be shorting this anywhere at that quarter level on that right shoulder, especially if they broke that the bull candle. I'd already be in, and I'd be adding to that position. I'd be adding on the rollover for the vertical move. On gold yesterday, again, I talked about one of the easiest ways I use to filter things is I will look for something in the third level. So again, we talked about gold. We were up between 50 and 75. Now this market didn't quite get to 75, but what it did do is gave us a top and then a second hit to the top for a double top. It's broken down and then pulled back into the double top for the short trade. So again, for people who aren't looking for this in live time, if the market goes up, I'm not looking for a double bottom. If the market goes down, I'm not looking for a triple top. If the market goes up on the third level, I'm looking for the double top. I'm looking for the triple top in some form, variation, or pattern. If it goes down, I'm looking for a double bottom. I'm looking for a reverse head and shoulders or a triple bottom. I'm looking for these patterns. You know, you'll notice on gold, we have a reverse head and shoulder triple bottom right in the rollover in the gap time. We have our peak formation low. We have a break in structure on that right shoulder line. And then right at the beginning of the session, in the first 15 minutes, they go down in reverse, put our right shoulder in place. We'll zoom in on this. We get our engulfment, reversal, explosive pattern for a reversal not only back to the high of the day, but through the high of the day. In the gap time, we get a rounding bottom, cup and handle for a continuation back towards the high of the day. So again, we'll talk about continuation patterns later, but this is what I talked about earlier with getting Peter Brandt's book, Schabacher, Edwards and McGee, Classical Chart Patterns for people who are emailing me all kinds of other stuff about Elliott Wave, Wave 1, 2, 3, and all this stuff. I have zero interest in that. I am looking for simple, explosive trade setups, continuation patterns, reversal patterns. If it's in the trading range, we gain this pattern that we see right here, this second hour. New York stop hunts back up to the high in 3 pushes. So again, they first hour puts a high in place, puts a low in place. Okay? We'll look at this from Friday night, same pattern. New York opens, they hit the stops on lower level longs, and they go up in 3 pushes. 1 push, 2 push, 3 pushes. They take out the high of the day, bear, pin, hammer, then the engulfment of the high bull candle for a 100 pip move back through the low of the day, 50 to 50. Take a look at this pattern from Friday night. Payrolls, first hour after payrolls, they put a high in place. Payrolls stop hunts down into the lower level longs, puts a low in place. Then the market proceeds to auction back up to the high of the day. 1 push, 2 pushes, 1, 2, 3 engulfment at the high of the day. At 25, proceeds to take out the low of the day and drops 100 pips. Same pattern, different day. So for these people who are still struggling and you're wondering how you're seeing it live time, count the levels of rise. 25, 25, 25, 3 levels of rise. I didn't say 50 pip boxes. If it was 50 pip boxes, this would be a 150 pip box. 3 levels of 50. It's 25, 25, and 25. Today on gold, we're in the upper 25 pip box above double zeros, but again, keeping it simple. Before the market opened, the pre-market put in a high of the day. It drops back down inside. So for people who say, well, how do you know you're at the high or the low? Well, this is the high right here. This is the high up here of the day. When the market opens, we have a low in place right here. But we're inside of the previous session, the previous day's high. We're below the quarter level. I'm marking this off. We're underneath. The high may be locked in place. Remember what we're looking for. If I'm up high, I'm looking for a double top, triple top, double bottom, triple bottom. Now this triple top or double top may be inside of a peak formation. They may have already locked in the high. This double bottom or triple bottom may be inside a peak formation. It may already be locked in place. So again on gold, we've dropped back down inside. When I say inside, we're below 25, above 0. And again, just scrunching this chart up, is there volume potentially that could get stopped out if this market was to fall? Well, I see this right here. I see this. We have lows down here. That means if the market falls through, does it have space? Can it go lower? Absolutely. The market trades up into the quarter level, inside of the high, drops back down, trades back up into the quarter level. 1, 2, 3, engulfment. Trades back up into it, and our second engulfment for the vertical move down. Pulls back at the double zeros, rolls over, creeping trend, and again I talk about don't counter trend the move once it starts. This market will need to go into consolidation, which it may be in the process of doing right now. The quarter level may be acting as a low at this stage. This may just be consolidation for a continuation move down low. We do not have a pattern in place yet, but the market has broken down and gone into consolidation. So again, triple top inside of a peak formation. This is a triple top at the high. They broke down. The market opens. We have 3 pushes into the high for a continuation back down. Keep it simple, traders. These patterns are on any pair, different time frames. It's not going to show up necessarily on every single pair, every single session. But again, I'm looking for simple. The yen crosses have broken down. I'm going to look for simple trades on those pairs. Chances are the euro yen was the weaker of the 3. Aussie yen was a great trade as well. Simple, scalable trade setups. Double tops, triple tops, double bottoms, triple bottoms. Those are 2 of the very most common reversal patterns that you're going to see. And again, major round numbers, timings. Keep it simple, traders. These trades show up all the time. Once you lock it in, get off the screen, don't keep trading. As you can see, the market can start to go back and forth, and as much as I know some traders like to keep trading it, as I said, if you're there sitting around longer and longer, chances are you're going to end up giving money back. So keep it in your account, lock it away, review the trade. What did you do well? What could you have done better? What can you do better on the next setup? Keep it simple. Make today a great trading day. Have a great session, and may the markets
Hi
go with
traders,
you.
it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.